All right. Hello, everyone. Thank you for joining us throughout the day here at the Lytham Partners Fall 2025 Investor Conference. My name is Robert Blum, Managing Partner here at Lytham. Our next presentation today will come from U.S. Gold Corp, and presenting from the company is their chairman, Luke Norman. As a reminder, the company trades on the NASDAQ under the ticker symbol USAU. Luke, thanks so much for your participation in today's conference. The floor is all yours.
Thank you, Robert, and hello, audience. So, as Robert mentioned, I am the executive chairman over at US Gold Corp. I'm also a co-founder of the company. We went public initially in June of 2017 on NASDAQ. Since then, a lot has happened with our company. So, fast forward to today in 2025, here we have a fully permitted, shovel-ready gold and copper porphyry system sitting in Cheyenne or just outside of Cheyenne, Wyoming. And I'm going to explain to you how this pretty tremendous feat has come together. So again, we're listed on NASDAQ, purely on NASDAQ, and our trading symbol is USAU. I will skip through the niceties of obviously our disclaimers. So we have three core projects in the company. They're all US bound, of course, given the name, US Gold Corp. The one project I'm going to focus in on today with you is the CK Gold project in Wyoming. It again is a copper gold porphyry system. It sits at surface, and we're about to go in and harvest that ore body. We're literally permitted and about to head into the development phase of the company. So an exciting time. If any of you are aware of the what they call the Lassonde curve in mining, and maybe I'll talk to that later on. Okay, a bit of a key kind of just takeaway here is just pointing to us, our board of directors. The reason why I like to bring this up front and forward is we are a group of professionals who've been in the mining industry individually for 20 plus years, collectively in the hundreds, of making people money. We are aligned with shareholders. We know how to take people's investments, put them into smart projects, into public company ventures, and ultimately make people money. George B., our CEO, he was developed some of the largest gold mines on the planet for Barrick Gold Mines, and now he's here working with us on our junior mining company, all the way through to, of course, Johanna Fipke, who famously, her uncle, of course, made the big diamond discoveries in the northern parts of Canada many years ago, is a very accomplished lawyer with Faskins in Canada. So very strong board. Okay, this is what you're mostly interested in, obviously, would be a capital structure and how are you going to make money investing in US Gold Corp. So I did mention that we went public in 2017. However, I missed a very key aspect to this company, and that is in 2020 is when we completely revamped the company. We consolidated back the stock, and we decided we were going to work towards being a developer in Wyoming versus just being simply an explorer in Nevada. So that shift was a very tectonic shift within the company. Come August of 2020, of course, that was in the midst of COVID. We brought on George B. as our CEO and immediately started the permit process whilst we went about establishing a reserve report and ultimately an economic framework for the CK Gold project so that we can make an argument that this was worthy of permitting and putting into production. And again, fast forward just a little over, bang on 5 years later, and here we are. Reserve, everything done, pre-feasibility is done. We're completing right now a definitive feasibility, which I'll speak to. A very simple thing to understand when I get into it. And we are, head forward towards development production. Now, what we do have, which is very unique for a junior mining company, is a very, very tight share structure. You'll notice we have 14.3 million shares outstanding here in our common shares. That is unique. Not many junior mining companies have such tight share structures. Why and how have we managed to achieve that? We've raised well in excess of $60 million US to get ourselves to this point over the last 5 years, through all the engineering and the tough parts of the boring parts, actually, I'll refer to them, of advancing a project from a science test into a bankable reserve and ultimately a permitted project, it's a heck of a lot of money that's required. Well, we've managed to do that with minimal dilution. And the reason we have is because we care about the stock. We are co-aligned, we are aligned with our shareholders because we're all investors and shareholders in the company. And I think if that's one thing you learn about investing in junior mining companies or oil and gas or whatever industry it is you're interested in, you always want to know the ownership of management, because if management own and care about the stock, then the company's going to trade accordingly and you not succumb to this endless dilution that we notice in the industry. All right, well, I've rattled on about that enough. We have a very solid chart. In fact, more recently, we've hit 52-week highs and trading in around $16.50. So our market capitalization is definitely higher than this. It's creeping up into sort of the $230 million range. Still yet incredibly low for the where we are in the development stage of our company. So I'll back that up now with a bit of evidence. First and foremost, this is basically a snippet or a show of the highlights of what is deemed a pre-feasibility study. So this is an economic framework from which we ourselves as a company and the investment community can work from to understand ultimately how much is it going to cost to build this project and how much is it going to cost you on a per ounce of gold basis to ultimately produce relative to your peers. So it creates benchmarks we can use to compare to our peer group. And you'll see some pretty interesting numbers here. And I'm just going to go to this top line first. The initial CapEx. So that's $277 million. That is the number that, as of February of this year, we estimated it would cost to build this and put this into production. We're in a bit of an inflationary environment, so definitely we imagine that number's crept a little higher, but that will be wrapped up in our forthcoming definitive feasibility, which we're in completion of right now, or working on completion of right now. Another really interesting number here is this very low all-in sustaining cost. So what this represents is we can produce a gold equivalence ounce, and I say gold equivalence because we're producing copper and gold. So we measure our ultimate concentrate that we produce and sell from the project in its per ounce gold value. We're going to be producing that at under $1,000 an ounce, which is remarkably low, and there's very good reason for it. We will be producing 110,000 ounces per annum, and currently we have a 10-year mine life, and that is literally only restricted by the amount of drilling we've done at this project, and I'll touch on that as well as I get through the presentation. This sensitivities table here, which also was part of the pre-feasibility study, is key because what you're going to notice here is the baseline numbers we use to get to the economic output that we've got from the pre-feasibility, and that was $2,100 gold and $4.10 copper. Well, today I think gold has reached somewhere in the realm of $3,700 an ounce. So clearly that would have just a remarkable effect on the profitability of a venture of a project like this. Here in the sensitivities, we thought it was generous to show the upside of what $3,000 gold might look like. And you can see we have an extremely high NPV of just under $1 billion at $3,000 gold. So I'm sure you can imagine how strong this project is going to be at these higher metals prices. Now, the reason why we managed to have such low cost from a development perspective, that CapEx number I took you through, and ultimately our production number, the all-in sustaining cost, or AISC as we refer to it in the business, is because of the location of the project. It's one thing, it's a tremendous place to be in the US right now, regardless. The change of administration has really loosened up the spigots within, I think, what was everyone would agree was a broken model that was dealing with things, people like the Bureaus of Land Management, all the different federal nexuses that it took to get through the permitting process. So many companies have been held up in what we also term permitting purgatory. So we were fortunate enough, our project sitting within the state of Wyoming, within the US, we sit on state ground. So uh, their mining law within the state of Wyoming on state ground. We didn't have to deal with any of the federal agencies. So we dealt directly with the officers of the Bureau of Public Utilities here in Cheyenne, Wyoming, and we went through the permit process as arduous as it is. It's certainly, they don't take it light. We're dealing with the environment, we're dealing with air quality, we're dealing with water management, wildlife patterns. Are there any other species that would be upset? Noise interference, traffic, all those different variables we had to do complete studies on. But we were dealing again with a sector in a resource-friendly state whereby they had all the permitting process was set up for us. Is well established, for us to interact with. So we're right 20 miles outside of this town. The other importance of that is you're only 2.5 miles north of the I-80 highway, Union Pacific Rail running through here. So infrastructure and employees, personnel are all there. They're right in our backdrop. So we don't require man camps for people to stay on site. We don't need huge facilities to store backup equipment and truckers and loaders and backup motors, engines, all that stuff. Because again, Cheyenne, Wyoming, it's an hour-and-a-half drive north of Denver International Airport. It's about a 4 or 5 hour train ride for equipment if we need it from Salt Lake City or out of Denver. Everything is so close to us. So that was massively and is massively impactful on keeping the costs of development and production down. Again, having an employment hub here, we're not bringing in specialized personnel from all over the world. We don't, there's metal fabrication. There's even a fuel refinery nearby and even the blasting agents that we use to explode the rocks are produced about 20 minutes away from the project. So that all ties together. A lot of information I know, but really in bringing down the cost of this project. Now, another thing that's great about the location, of course, as we're all aware with the new administration, is both gold, copper, and silver now have been included on the critical minerals list in the US. And Copper King, or CK as we acronym it, is going to produce all three of these by way of a concentrate. So I'll get into just the very simple form of mining that it is. Doesn't look so simple in this schematic here, I know, but it is one of the most simplest forms of mining you can get. And that is we harvest our ore by way of an open pit. And I'll give you a better kind of look at this in a little bit. But we come in, we blast rock, and it gets trucked over a very short distance to a run-of-mine pad, ROM pad. It gets crushed, ground, and then it rolls into what's called a concentration or a flotation circuit. And that literally is just a slurry of water and a reagent, which is very similar to a laundry detergent. It picks up the heavy metals. It's sloughed out of the flotation circuit, dried, and that concentrate is shipped off site in a very high grade form of copper, gold, and silver. There's huge demands for concentrates globally. It's a massive demand, but obviously there's a huge amount of interest in keeping these things domestic now. Again, a lot of thanks to actually the current administration for really helping all that come together again in the US. So the other reason why the costs are low, this is now obviously just a map view looking down at what this mining operation is going to look like, is it's a very small footprint. It's 1.5 miles by 1.5 miles. We crush, grind, float. We send a concentrate out of a roadway to the south here, and we dry stack our tailings. Another very interesting thing about this project, nowhere in the economics that I've just shown you previously, there's two piles here. I'm hoping everyone can see my cursor. There's two piles just to the side of the pit. Those are deemed waste material or waste rock by way of our current feasibility studies. However, it is a very high form of aggregate granodiorite that is sold into the aggregates market at $20 to $25 a ton. And we have 40 million tons of that sitting on surface for free. So additional economic impact in the future, absolutely. I also mentioned that we have a 10-year mine life, but that is only because that's all we did. We chased with the drill We constrained ourselves, drill constrained a 10-year development cycle because we didn't want to keep spending money exploring for additional ounces when we were not sure if we were going to be able to permit this. Now, of course, fast forward to today, and we're fully permitted, but there's a lot of mineralization below the 1.7 million ounces of reserve that we currently contain, or 1.67, so 1.6 and three-quarter million ounces of gold equivalents within our reserve model. But we see upside of 1 million+ ounces just below the pit and additional ounces southeast, laterally extending away from the deposit. So it's very clean mineralization hosted in granodiorite. 80% of the holes that we've drilled into this project have all finished in ore, including a very high-grade hole that went right down the middle of the project and finished at 800 foot in depth, continuing of ore. So a lot of upside to this project, and that will create more value in the future also. Right, so I've spoken to these variables, but I'll just touch on it again. A very, very simple form of mining, just a simple crush, grind, float, concentration, huge demand by the off-takers for a quality concentrate like what we create. It's very, very clean, has its own what we call flux characteristics, which means it will actually work really nice in a smelter. It will create its own burning temperature without needing a heck of a lot of energy source for it. And again, the proximity to Cheyenne, Wyoming, and proximity to even Denver, Colorado, means that we have a very active workforce ready to go that are going to be going home at night, basically gig employment. Right, so the project has been nothing but a win-win for the state of Wyoming, and I'll get to that right now. So during our permit process, the location always looked like it could be a challenge. In fact, I'm going to flip back a few slides for everyone, if they'll bear with me. The location, as wonderful it is relative to the township of Cheyenne, it also abuts a state park here called Kurt Gowdy State Park. Now, I'm just going to refresh everyone again. We are permitted. The state park ended up not being any kind of an issue through the permit process. But what we did recognize, and the Parks Board recognized early on, is these two lakes that you can see to the northwest of our land holdings, Crystal Lake and Granite Lake, are man-made impoundments or water reservoirs which host the majority of the township's water supply. They're catchments from the Snowy Mountains about 100 miles away, and they feed it along a waterway here. They mix it with well water, and that's their potable water source in Cheyenne. Well, it is grossly under capacity or over capacity, however you want to term it. Basically, they need more water storage. And we started looking at that problem as we started doing the engineering around CK, and we very quickly recognized just our reserve pit alone. It's about 90 acres. You can see my cursor in the top left corner, I hope. About 90 acres at surface and runs about 700 foot in depth. That would more than double their current water supply or water storage for the township. Now, so we've done all the testing in terms of its metal competency, whether it's going to leach acids obviously into the water, and it certainly will not. So this project, whilst being obviously hugely beneficial to us as investors and shareholders, hugely beneficial to the US in terms of creating jobs and ultimately domestic gold, copper, and silver in a critical mineral space, it's also going to be critical for the environment post-production. It prevents the Bureau of Public Utilities from having to increase the dam heights at these two reservoirs within the park, which would have ultimately resulted in the park being flooded and a lot of recreational sites wiped out, not to mention the tens or hundreds of millions of dollars it was going to cost to do that. So the project brings benefit there. It generates royalties to the school board in Cheyenne, Wyoming, by way of our royalty schedule. And now we're also going to have the added economic benefit of our waste material being a highly valuable aggregate source with a in situ value already paid for, harvested, and mined through the mining operation. There is $800 to $1 billion worth of rock sitting there for free that we can ultimately sell and use to help benefit the project and us as investors. This slide actually talks to that in greater detail. I just felt the location map was a better one to talk to, but you can see here more information on that. And you'll find all of this information, of course, on our company website, usgoldcorp.com. Okay, so upside potential, we have clearly, as I mentioned, a lot of resource upside outside of what we have established in our reserve and our forecast within the pre-feasibility, which is now becoming a definitive feasibility. We have a very vibrant aggregate market nearby. That's the importance of this as well, of course, is just to our south is Martin Marietta Materials, a $40 billion New York Stock Exchange listed company. They are selling a very similar aggregate source via Union Pacific Rail out to the West Coast and all the way down to the Colorado Front Range. Well, I shouldn't say all the way down, it's very close. And then we have a lot of upside from the ongoing optimization we're doing around the project. We actually think we can do this for better, we can do it cheaper, and probably get even better recoveries. So it's a very, very good time to consider being an investor in US Gold Corp. Gold, copper, and silver reaching near or at all-time highs. We have, of course, via the Lassonde curve that I don't have here to share with you today, but we're now in the breakout phase where you would expect to see us to start to get valued closer to our NPV. For those of you who are more technically inclined, our NPV margin is we're trading at about 0.3 of NPV right now relative to our PFS. But with the metals prices the way they are right now, you'll expect obviously all these variables to increase dramatically. So permitting done, advanced engineering done, aggregate marketing study done. We've got lots of variable opportunities for financing this project. We're going to focus in primarily on debt and post-production, water development, and a storage opportunity for the state and the city. So with that, I'll hand things back over to Robert.
All right, fantastic. Luke, thanks so much for the presentation, walking us through things here. Thank you everyone here for watching as well. As a reminder, if you have any questions, would like to perhaps schedule a one-on-one meeting either later today throughout the conference or maybe in the days or weeks to come, shoot me an email, Blum, B-L-U-M, @lythampartners.com, and I would be happy to coordinate, or I'm sure you can reach out to the investor relations team there directly at US Gold Corp. Similarly, if you'd like to learn more about Lytham, make sure you visit our website, stay connected with us on LinkedIn so you can stay apprised of future events such as the one here with US Gold and Luke's presentation. So everyone, we hope you have a great conference. Luke, thank you again so much for your presentation today.
Thank you very much. Thank you, everyone.
All right, take care, everyone.